Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro, and my username on eToro is 𝗃𝗶𝗀𝗲𝗃𝗀𝗀𝗀. Thanks very much for listening to this video today, and I say it every time, but please, it does help. Like and then subscribe to my channel and hit the notification bell, and then you will be updated of all new videos in the future. So in today's video, I'm going to be doing my usual update where I explain about what happened in the stock and the crypto markets last week. And I'm going to be explaining a little bit how our portfolio fared overall for the week. So without further ado, let's get started. So last week, our portfolio performed extremely well considering what happened in the markets. So our portfolio was up about 2.48% for the week. If we compare that to the Nasdaq, which was just slightly up for the week at 0.6%, and then the S&P 500, which was down slightly at 0.3% under, then our portfolio did perform really well considering. Bitcoin did have an outperformance last week of 12%, and the crypto markets did rally after a slight dip last week. So the main reason why our portfolio outperformed last week, I would say, is because there was obviously that strong bounce in Bitcoin, and it's now taken us close to that kind of $25,000 resistance level, which we've been trying to break through for the last couple of weeks. I think if we can break through that, I think it's quite likely that that could trade up over the next month or two to around 30,000. But let's see if we can break through those key resistance levels. Also, I did a lot of short-term trades last week. I did a short-term trade in the Spanish 25 index, as well as the German 40, the DAX. Those were both short positions, which I use as a hedge. And also, I am not very bullish at all. I'm quite bearish on the European market. So I have those shorts in place. And I do both short-term shorts there as well as some longer-term plays as well. I also did a Forex trade as well in the US dollar and Swiss currency. And that tends to be my most popular Forex trade at the moment. I also did 2023. If we look at the year-to-date benchmarks, our portfolio is performing extremely well, and we're up over 20.5% overall for the year. So really strong start to the year, which I'm really pleased about. If we compare that to the other benchmarks, Nasdaq is up about 12.62%. The S&P 500 is up about 6.24%. And then the 𝗁𝗂𝐶, which is up about 7.42%. The Hang Seng Index, which is the Hong Kong index, in which we have quite a few stocks in our portfolio, is up about 5.59%. And then Bitcoin is up a whopping 47.34% for the year, albeit bounced off those low levels. So as we move on to the main news of last week and our portfolio, if we look at the inflation data, it came in at 6.5% year on year in the US, and that is higher than was expected. But it was the slowest pace since October 2021. So what we can see really is that inflation is coming down. However, there are some concerns about the slowing pace of inflation reductions. And we had seen quite a sharp drop in inflation over the previous readings. And now we're seeing, yes, it's slowing down, but the inflation reduction isn't as high as what the consensus market had been expecting. And that means that there could be more worries that inflation could be a bit persistent. It could take longer to go down. And that in turn means that there could possibly be more than expected interest rate rises in 2023. Markets currently pricing in a further 2 increases in the interest rates, but they'll have to watch the data to see how it progresses, if it comes down fast enough, close enough to their target, or whether they need to keep increasing them. It is also important to note that there is a lagging effect as well. That inflation data is really showing that there has been a rise in the shelter costs, which is accommodation. But what we've started to see is that shelter, the amount of homes that are going above asking price is starting to decrease. So it's showing a little bit of a softening market. So as I said, there's a lag from when they put those interest rates in place, higher interest rates in place, until it starts to affect the normal homeowner and those taking mortgages. So but however, this increased rise in shelter has been offset by the reducing used car prices. Used car prices were extremely high in 2021, 2022. As there was a shortage of semiconductor chips for automobiles, and that caused used car prices to go up as there was less production of new cars, etc. So that is coming way down. So all in all, inflation is coming down, but not quite at the pace that was expected. So if we look as well at some other data, retail sales, they jumped 3% in the month. And that is the biggest increase in 10 months. And that was well above consensus expectations of around 1.8%. So what that really is showing that people still are spending lots of money, and that's actually increasing. And what we have actually seen, especially in the US, is we haven't seen retail sales and consumer spends go down significantly. But what we have seen is people's savings go down significantly and credit card debt increase. So people are at the moment still spending their money, and we'll just have to see and watch that over the next couple of months, how that unfolds and whether those retail sales start to go down when consumers run out of money or have to pay those credit card bills. Is also planned over the last kind of couple of weeks. There's also been a bit of tension between China and the US, and that is because of a spy balloon incident that happened over the US. And apparently Biden is due to speak with President Xi this week, and he plans to speak to him about this incident. And hopefully this could start to force some tensions that had been escalating between the two countries. If we move on to Europe now as well, we've also seen that the UK consumer price growth, that fell for a third consecutive month in January to 10.1%. And this is mainly due to an easing in services and fuel costs. Obviously, as you know, fuel costs skyrocketed in 2022. Those are coming down slightly. And this has had a positive effect. We're also seeing that the UK unemployment rate, it remains just off an all-time low at 3.7%. So again, just like the US, what we're seeing is a very strong employment market in the UK. And with that rising and that all-time low of UK unemployment rates, it's going to probably take a lot more of erosion in terms of the economy for those unemployment rates to increase significantly. So it does show that there is still room, and I expect the UK to continue to increase those interest rates. We also saw UK retail sales. They rose in January by 0.5%. And that was against the consensus estimate that had called for a decline. So again, just like the US, retail sales are continuing to rise. So it's quite a similar picture, albeit the UK is slightly behind in terms of those interest rate rises and the speed of those compared with the US. So I expect that to become a problem a bit later. We also saw Eurozone employment. It rose to a record high in the final quarter of the year by 0.4%. And this is the most since early 2021. Again, that we're seeing even in the Eurozone employment rising and more open jobs. So the effect of those interest rates haven't quite kicked in to employees not employing staff. We've also seen new homes in China, and they've remained relatively steady in January. And what this really shows is that the Chinese housing market might be starting to stabilize. As we know, in 2022, it was a very dire year for Chinese home builders, as the Chinese real estate sector suffered significantly, and there was obviously a crisis with Chinese home builders, etc. And now we're seeing that starting to break a 16-month slide. So we could start seeing some stability in the prices of Chinese houses. We also seen the People's Bank of China. They've injected a further 199 billion Chinese yuan into the Chinese fiscal system. And what this really shows is China is continuing to do quantitative easing, which is really contrary to what's happening in the rest of the world, in Europe, as well as the US, where there is tightening occurring. And I do think that now that the Chinese economy is starting to open up after COVID, and there's less restrictions in place, and they are starting to do this easing activity, I think that Chinese stocks have a very bright year ahead. As we move on to our top 3 performing stocks for last week, and the top performing stock for last week is Bausch Health, and that was up about 32.82 on the appointment of a new CEO of Bausch & Lomb. And the second best performing stock in our portfolio last week was Magnite, which is a sell-side advertising company, and that was up about 16.81% for the week. And then the third best performing stock for last week is Coinbase, and that is up about 14.21%, as we are getting much more volume on the crypto exchange. And obviously volume, it leads to increased fees and increased profitability and revenue for Coinbase. So it has been a decent bounce back from Coinbase in 2023, albeit off some very low levels in 2022. Just an honorable mention, I usually just talk about the top performing stocks within this slide, but I just wanted to mention that NIO was up 39.98, which is a Chinese crypto project, and Chinese crypto projects have done really well this week, which I will explain a bit in a moment. So as we move on to our Death by Charts edition, I'm going to be running through 4 key charts for you this week. And as I said, as I mentioned a bit earlier, that January inflation continued to cool, but at a slowing pace. And we've only seen a modest improvement from the peak. So as he said, it's something to watch out for, how inflation stacks up over the next couple of months and what the data says, because I think it's important to note that inflation might not just keep going down in a very straight line. There could be some different data readings on different months which show that inflation might have increased or might be starting to slow in pace. So it's worth keeping a watch on that. Another thing that I wanted to bring up is the second chart. And as I said, one of the main sticky things for inflation so far has been shelter, which is mainly kind of home prices. And what we've seen is that only 20% of home sales are sold above the final list price. So a lot of people might be saying, well, that's not major. I mean, a lot of them are going over the price of the listing. However, that is down pretty significantly from what it was in 2022, for example, where over 40% of those houses were going above the final list price. So it is a slight softening, And we mustn't forget that there is a big lagging effect on people taking new mortgages and buying houses, etc. So I do expect that to come down significantly over the next few months or so, which I think should be good for inflation readings. As I mentioned as well, the market expectations for the Fed funds rate, which is the interest rates, has started to shift higher. And that is mainly because of that inflation data that I mentioned. There was some, obviously, as inflation is starting to slow, that is basically showing that and giving the markets an expectation that the interest rates will rise further this year. It's currently priced in as most probable that there'll be 2 more rate hikes over the next few months before it potentially pausing for a period of time, but that will depend on how those inflation rates go. Fourth chart, which I wanted to show, I just wanted to really show how each different sector has kind of stacked up so far on a year-to-date basis in 2023. And as you can see, the defensive sectors, such as utilities, healthcare, energy, consumer staples, which did pretty well last year in a struggling market, it's kind of flipped on its head, and there's been a lot more growth in growth stocks, as well as, lots of different sectors. The consumer discretionary sector has picked up the most this year at about 16.3%, and that's followed by the communication services and information technology, which is a lot of those are tech based at 13.6%. So we are seeing a lot of those names that were completely battered in 2022 recover somewhat this year in 2023. So it's been a fast start to the year. I'm expecting some of those numbers to potentially even out. I've gone quite lightweight on technology stocks in our portfolio, and I have cut back and trimmed some of our tech positions. However, I think that a lot of the good quality names should have a very good year ahead. So as we move on now to the crypto news and views, the crypto market did pretty well this week. We saw a big rise in Bitcoin, and again, it's, as I mentioned, it started to hit that key resistance zone at 25,000. We've been trying to break through it for a few weeks, not managed to break through it yet. However, I think that if we do break through that 25,000, I think it's quite likely to reach that 30,000 mark quite quickly. And I think what we're really seeing in 2023 is very similar to 2019, which would be about the same period in the 4-year Bitcoin halving cycle, in which we hit the lows at about 15,000. And now it's kind of bounced back to that 25,000 mark. And I still think it has some room to increase as well over this year. And now I'm expecting really from Bitcoin is for us to mark a much larger range. I'm expecting somewhere between 20,000 to 45,000 for the year. I don't think we're going to hit an all-time high in 2023, and I think it's unlikely that's going to happen until after the Bitcoin halving, which is due in May 2024. So just over a year until the next halving. One of the big pieces of news was that Hong Kong are going to start issuing digital asset licenses. And this is really important because it's not really just dealing with Hong Kong, because although this legislation is specifically about Hong Kong, as China obviously runs and governs Hong Kong, it's showing really as a kind of a test bed really for China to potentially roll out something like this in mainland China. And it just really shows that the stance on crypto is starting to soften, And this has been extremely good for altcoins this week, especially those that are either Chinese altcoins or of Chinese origin, situated offshore. And they've been pumping like crazy this week. We've seen good rises from NEO, which is obviously in our portfolio, as well as some other Chinese altcoins like VeChain, and a few others which have pumped quite a lot this week. So it's quite interesting as well, because there's been a lot of market sentiment over the last few months as well, from some of the top industry players in crypto, and they have been saying that it's quite likely that for the next bull run, it's quite likely that a lot of that buying is going to come from the East, whether that be China, Hong Kong, Korea, Japan. They think that is going to be the fuel that ignites the next crypto bull run, which I agree with. I just think it's going to take a little bit of time to play out. We also, as I mentioned last week in the news, Paxos were told that they had to stop minting new Binance USD coin, and that they weren't allowed to mint anymore, and that they were going to potentially have to face a lawsuit. And Paxos this week have burned over 700 million Binance USD, and we've seen a big influx of stable coins being moved from BUSD to USDC, which is another stable coin, as well as USDT, which is Tether. So there's a lot of regulatory pressure around that as well. Also, last year it was announced that Helium Network was going to migrate over to the Solana blockchain. They were previously trying to build their own blockchain, and they realized it was too technically difficult to do that whilst also building their project, and they didn't see the advantages of building their own blockchain anymore. So that is being migrated over now to Solana for March period. So it'd be quite interesting to see how the price action continues to shape out there. We also saw Do Kwon, a report which said that Do Kwon, who was the previous founder of Luna and the UST stablecoin, which both collapsed last year. And there was a report actually out that said that he removed over 10,000 Bitcoin from the Terra Foundation after the collapse had happened. And he's now hiding out expected to be hiding out now in Serbia at the moment. And there is a lots of arrest warrants out from South Korea, as well as he's also trying to be charged as well by the US. So yeah, it just shows that there was a lot of corruption there with Luna Coin. A lot of people said that it could have been just because it was a bad design, and that the design of the algorithmic stable coin actually caused the collapse. But I personally believe that it's a bit of both. I think there's a lot of corruption there, as well as a poor design. And I am very skeptical still on algorithmic stable coins that are not backed by either real Bitcoin or backed by US dollars. So lastly, I just wanted to bring out this chart on Bitcoin. And the reason why is because I know a lot of you have held Bitcoin for quite a long time. Some of you might have got in near the highs in 2021, for example, and you may have experienced some pretty severe drawdowns on those Bitcoins that you had purchased. And last year you could have been feeling quite down on yourselves, and you might have regretted that decision, etc. And you might have been holding on till this date and not sold. So really what I want to show you here is that there is a lot of volatility in Bitcoin. There are big drawdowns in the history of Bitcoin, all the way from its inception to now. And you do see these big drawdowns after the big rise in Bitcoin prices. You see the dip every 4 years as per the Bitcoin halving cycle. So really what I want to say to you here is a lot of people are going to say to you in the next Bitcoin bull market, they're going to say, well, you just got lucky, really. You just invested and you got lucky that the price happened to go up. But what they didn't really understand is that you've had to experience a lot of volatility. And of course, there is risk with any good investment, especially those that you're expecting to make an outsized return in. There's going to be times where you're going to experience large drawdowns. So I think that your hard work will go rewarded. It will become rewarded in the next bull market. So well done if you've managed to hold on to your Bitcoin, and especially those that have held on to the copy as well over the last year or two. And I expect as the crypto markets continue to recover and we then eventually go into a new bull cycle, that you will be rewarded for that as well. So don't let anybody tell you you got lucky, because you didn't. You worked hard for it. So thanks everybody for listening to this video today. Also, if you haven't already, please find the link and join my Discord group, especially for those new copiers who might have joined the copy recently, or any of those that are watching my portfolio as well. We have a really great discussions on a daily basis with some really awesome community members. And it's a really good opportunity as well to ask me any questions that you have. So thank you very much for listening to this video today, and have a great week ahead.